Have you ever felt kind of trapped? You've got something valuable in one place, but you desperately need it somewhere else? Well, believe it or not, that's the reality for the entire digital asset world. So today, we're going to talk about the solution, blockchain bridges. Think of them as the brand new highways connecting these isolated digital ecosystems.
Okay, to really get this, let's start with a simple thought experiment. Picture a world full of isolated islands, right? And each island has its own unique, incredible treasure. Let's say gold. Now, how do you move that gold from your island to another one, safely, across this huge, unpredictable ocean?
That little story? That's not just a hypothetical. It is the perfect metaphor for the blockchain world right now. Every single one, Bitcoin, Ethereum, Solana, they're all their own separate islands. And the value on them? Well, for the most part, it's trapped. It just can't move freely.
All right, first up, the isolated islands. Let's really dig into why this is such a huge problem to begin with. So you've got these incredible digital islands. You have Ethereum with its bustling economy of decentralized finance. You've got Solana with its lightning-fast applications. Each one has its own rules, its own culture, its own native currency. They're super powerful, but they don't speak the same language. They are, at their core, totally isolated from each other. And that separation, it has real consequences. Value gets completely stuck. Imagine you have a valuable NFT on one blockchain, but you want to use it as collateral for a loan on a different one. Nope, you can't. This fragmentation just kills opportunities and, at the end of the day, it stifles innovation.
So if that's the problem, what's the fix? Well, that brings us to Section 2, building the bridges. How do we actually engineer a solution to connect all these different worlds?
A blockchain bridge isn't made of steel and concrete, that's for sure. It's actually a super powerful protocol. You can think of it as a treaty and a high-speed transport system all rolled into one. It creates this secure, totally predictable pathway for your assets, for data, and even for commands to cross that digital ocean safely.
Now here's the thing. Not all bridges are created equal. You've basically got two main flavors. First, there are trusted bridges. These are centralized. It's like having a single captain, a company, guarding all the treasure. It's fast, it's convenient, but you are trusting them completely. On the other hand, you have trustless bridges. These are decentralized. Think of them like magical bridges that run on automated code, smart contracts. So you don't have to trust any single person or company.
And that convenience of a trusted bridge? It comes with a massive trade-off. It's put perfectly here. You're placing all your faith in that one central operator. If the captain or organization fails, the treasure could be lost. That's a huge risk. So how in the world does your asset actually cross from island A to island B? Well, a really popular method is called lock and mint, and it's pretty clever. First, your original asset gets locked up tight in a digital vault on island A. Then a perfect copy, kind of like a receipt token, is created or minted over on island B. You can use that new token freely over there. And when you want your original back, you just return the receipt, it gets destroyed, and poof, your original asset is unlocked back on island A. Okay, so we've built the bridges. What happens now? Well, this is where things get really exciting. Let's talk about life across the chains. You have to understand, these bridges are so much more than just digital plumbing. They unlock true interoperability. All of a sudden, apps on totally different networks can talk to each other. For you, the user, this means you have the freedom to move your assets anywhere to chase the best opportunities. And for developers, it opens up this giant new canvas for innovation, letting them mix and match the strengths of multiple blockchains.
Okay, so what does this mean for your wallet, practically speaking? Well, the cost is a huge one. Transaction fees can be crazy high on some networks, right? So you can take your assets from a network like Ethereum when it's super busy, bridge them over to a lower-cost network like Polygon, and do all your trading there. That is real money saved on every single transaction you make.
But, as with any brand new frontier, it's not all sunshine and rainbows. This interconnected world has its own dangers. It's one thing to build a bridge, but it's another thing entirely to make sure it can actually withstand a storm. And that leads to the million-dollar question, or maybe in this case, the $100 million question. What happens when a bridge collapses? Because make no mistake, the ocean between these digital islands can be very stormy. These bridges hold enormous amounts of money, which makes them gigantic targets for hackers.
Look, just like a physical bridge, a digital one can have weak spots. We have seen major hacks that exploit tiny flaws in a bridge's code, leading to hundreds of millions of dollars just gone.
This is not a theoretical risk. It has happened and it will happen again. It means you absolutely have to do your own research, use reputable bridges, and always, always be cautious.
So even with all those risks, the big picture is incredibly clear. Bridges are fundamentally changing the entire game. They're turning these isolated islands into a connected continent, enabling movement, collaboration, and growth. They really are the essential infrastructure for the future of digital assets. So the question isn't if our digital world will be multi-chain, it's how safely and how quickly we can build the bridges to connect it all.